So in this environment, let's start off with some of your top stock picks that you're looking at the moment.
So, when we try to capitalize on the evolving landscape, take really layering into thematics as we do that. But, one of the pervasive areas that we tend to see just gaining traction is going to be the area of cybersecurity. Over at the Action Alerts Plus portfolio that I manage for the street, we have broad-based exposure to that in the CIBR ETF. And, we like that because it not only gives us broad-based exposure, like I said, so we're not relying on any one particular cybersecurity company. We like that because, again, of the evolving nature of cybersecurity threats, whether it's, increasingly an IoT or some other attack vector. The way we think about it is as we continue to move deeper into the digital world, hackers become increasingly creative, forcing companies to once again re-protect, if you will, their crown jewels. So we like that, but we're also seeing other signs that are emerging that kind of point to an improving smartphone market, particularly outside the Android ecosystem. In that environment, yes, we do like Apple, but we're becoming increasingly positive on Qualcomm. We also like a company called Universal Display that is seeing and benefiting from the adoption of organic light-emitting diode displays, not just in smartphones, but increasingly in tablets, and in other markets.
Chris, in the type of environment that we are in and kind of naming some of the economic data that's come out that the Fed, sure, at their next meeting might consider, but at the same time, a lot of people not really expecting them to really make a decision one way or the other firmly until November meeting. And so kind of waiting and seeing in this wait and see period, where should investors be most apt to kind of pick at a few names where you've kind of got the Fed on the sidelines, at least at this upcoming meeting?
Well, Brad, I think you used the right word, which is pick. And I say that because it's very difficult to go kind of like, all in or all out, because we're just not really sure what the data is going to bring. And as Rochelle had mentioned, we saw some nice favorable data that says, yes, the Fed's efforts are bearing fruit. The ADP report showed, slower job growth month over month. It also, if you dig into it, showed better wage gains. And by that, I mean slower wage gains year over year in August compared to not only July, but earlier this year as well. The JOLTS report you referenced. But let's just understand, we have a lot more data that we're going to get, not only before the September meeting, but before the November meeting. My thinking here is, at least in the very near term, we've got the July PCE that will drop, or be reported, I should say, tomorrow on Thursday. We've got the employment report. We've got data from ISM, S&P Global, both for manufacturing and services. And we still have the July data August data coming for CPI, PPI, again, all before the Fed September meeting. And my thinking on this is the market is going to be very volatile, kind of trading, right, on the most recent data point that it gets, because we're trying to assemble all these puzzle pieces together to figure out what is the Fed likely to do. So my advice against that backdrop, as you kind of alluded to, Brad, is have your shopping list. I rattled off some of the things that we own over at Action Alerts Plus, some of the ones that we're looking at as well. And we're just going to slowly build our positions using pullbacks, hopefully to improve our cost basis.